All right, welcome back to this week's Breakout Watchlist from August 1st to August 5th. In today's video, we'll be covering the top 10 setups going into next week. Each stock either has strong fundamentals, strong technicals, or strong volume patterns that lead to uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. And finally, if you're coming here for a specific setup, there's going to be timestamps in the comment section below so you can see exactly what you need. Here are the 10 stocks that we'll be covering today. As always, we don't want to spend too much time here because we've got a lot of charts to go over. The first stock that we'll cover today is AEHR. This is a semiconductor stock. Right now, that group is 114th out of 197 in the market. So group strength, not incredibly strong, but we did see a lot of strength come up off the lows on heavy volume. This had earnings last week or 2 weeks ago, 475% earnings per share growth, 166% sales growth, and 32% after-tax profit margin improvement. Really strong fundamentals there. It's got an accumulation distribution rating of A-, meaning many of the heavy volume days have come on up days versus down days. The stock's being accumulated, not distributed. Overall composite rating of 89, along with an individual relative strength rating of 96. Ideally composite ratings in the 90s, so we have a combo 90-90 for ideal setups, but still strong. In a weaker group in the market, out of 29 stocks, this is third strongest on relative strength, number 6 strongest overall composite rating. And we did not see fund ownership decline in December to March from 48 to 52. We actually saw an increase. Many growth stocks saw fund ownership decline in that period as institutions were taking risk out of the market. So really good to see, even though we did see a very strong decline from $27 all the way down to $6. Fund ownership didn't drop there. So this really got started from the setup point with that breakout on earnings, closed up 29% on 882% volume buzz. From there, we rallied to that 200-day simple moving average, which is now in a downtrend. That is one yellow flag on this setup. We're below the 200-day moving average, which itself is in a downtrend. So if I'm trading this, I'm going to be looking for quicker profits, not for a move from 10 to 25, anything like that. What I really like about this is after it got rejected just below that 200-day simple moving average, it pulled back on lighter volume than the breakout all the way to $10 and that 10-day EMA. On this pullback, it held $10. The low of the day was 10.03, right in that area. And then the next day, we also hold 10 and push higher, up 9%. Another day, 2.3%, and then finally up 0.2% on Friday. So really constructive action with the pullback to the 10-day EMA, holding that $10 round number, and then moving back up. So as this flags out, we know the market's been rallying really aggressively the last week or so. If we do see a pullback, kind of pulling back into this 1070 range, allowing that 10-day EMA to catch up, or if we have a week of consolidation in the market, which would be extremely healthy, then you have the 21 EMA catching up to 10, and maybe we play this a little bit lower in the range. But like I said, because we're under a declining 200-day moving average, if we do see a breakout into that area, I want to be selling into $13 and really booking the profits there with AEHR. Next is APYX. This is in medical products, 63rd strongest group in the market out of 197. So that's a B+ group strength rating. This has an A+ accumulation distribution along with a 67 overall composite rating and a 98 individual relative strength rating. This does have earnings in 11 days, so if that's too soon for your trading style, then just ignore this one. Click the timestamp, go to the next one. But this started with a really heavy volume breakout, highest volume at least in a year, maybe ever on this day. And then we pull back to that range, kind of hold the 550 area and zip out to 750, consolidate more, and then really break out through up to $10 here. From here, let's see, what day that was that? July 20th, really flagging out nicely, allowing that 8-day EMA to catch up. Trading above the 200-day simple moving average on Friday, closing above that. So with this, looking for a break over Friday's high, 962 is a potential entry point. Probably selling some into this 10 round number, along with the overhead supply to the left here. Again, not trying to hit a home run out of this, but trying to find an entry point, take some risk out of the trade, and then move our stop to even so we can protect our downside risk with APYX. The next stock that we'll cover is EXFY. This is in computer software financial. Another not super strong group, 132nd out of 197. It's got a C- group strength rating, A- accumulation distribution, which is positive, 43 overall composite with a 37 relative strength. So looking at the chart, you're probably wondering, Nick, why are we talking about this? It's a relatively weak group. It's an IPO, but it is starting to build kind of the right side of the base here. This bottomed well before the market bottomed on May 12th. From there, we put in higher lows, higher lows, higher lows 3 different times. And we're forming a launch pad setup right here with the 8, the 21, and the 50-day simple moving average, all trading basically within 1% of each other. Broke out over that area on Thursday, and then continued with higher highs and higher lows on Friday, up 3.7%. Kind of stopping right at 20.06, right around that $20 range. What I want to see with this is if the market pulls back early part of next week, and we pull back to the 8, the 20, 21, the 50-day simple moving average, trying to start a position around there, around $19, $18.80, and then managing my risk under Thursday's low, which would be $18.18. So we saw a rally in the market. We're expecting either consolidation or a pullback. If this pulls back to all those key moving averages, it'll be very, very clear if that area is going to hold or if it just falls through. So low risk entry point around $19 with all those moving averages below us. I want to bring up CRDO to kind of solidify that launchpad setup, because this is one that I missed last week and why I have EXFY on my watch list this week. So another IPO kind of got out a little bit stronger. So that's one knock on EXFY, not as strong, but we did pull back, have that launchpad setup, the 8, the 21, the 50-day simple moving average, a little shakeout, and then close above all of them on the 25th of July. And then we cleanly broke over that high, broke over 12, and you see a really strong rally. Going to a weekly chart on this, you can see just how strong that move was, 42% in 1 week. So that's the launchpad setup that I'm looking with EXFY. A little bit weaker because we didn't have that strong rally up the right side of the base just yet, but we do have the 8, the 21, and the 50-day moving average just below price. Next, we go to a biotech stock, GOSS. This also had a high volume close, let's see, at 11.05. So nice round number with 11, very close to the HVC level, the high volume close. I didn't trade this as it kind of came out through 12, but we're pulling back on below average volume. This is the 50-day simple moving average volume rate here, and you can see all the pullbacks have come on below average volume. We did slice under the 8-day EMA, but kind of pulling back to that $11.05, $11 area on lighter than average volume, as biotechs had a pretty rough week last week. As the market rallied, biotechs just relaxed, kind of pulled back. So I'm not sure if the group is falling out of favor or if it led on the way up, now it's leading the pullback and then going to take off the next step. So we don't know what the market's going to do next. We're just trying to find low risk entry points on stocks that have the potential to have good risk reward. So this has the volume coming through as it broke out from 680 all the way to 1240. Now we're pulling back on lighter than average volume right to the HVC level around $11. That's where I would want to start a position, 11.10, 11.12, something like that, to keep my risk just under $11, 10.93, something like that. The next stock we'll cover is IOT. This is another IPO stock in computer networking, 105th strongest group out of 197. So C+ group strength rating, A accumulation distribution, 33 overall composite with a 37 relative strength. Not super strong, but IPO working up the right side of the base. Looking at the volume characteristics, and that gets reflected in the accumulation distribution rating of A. All the heavy volume days recently, all the days above the 50-day moving average of volume have come on up days. That's what the blue candles represent. So this stock is clearly being accumulated. Even though it didn't really rally with the market last week, it rallied beforehand. The relative strength line has been in a very strong uptrend up until last week, where we pulled back on extremely light volume, kind of undercutting the 21 EMA, but then quickly reclaiming that on Wednesday, pushing higher on Thursday, and then I believe an inside candle on Friday, working under that $15 pivot. Both of these highs were at $14.75, so if you want to kind of jump ahead of that $15 pivot, a break over $14.75 is a potential entry point for IOT. Coming back to one of my favorite stocks this year, PRVA. This is in computer software medical, the 14th strongest group out of 197. So it's an A+ group strength rating. This has a 96 earnings per share rating, A- accumulation distribution, 99 overall composite with a 98 individual relative strength. Really checking all the boxes fundamentally. IPO working up the right side of the base, much higher than EXFY is. So that's nice to see. We bottomed, let's see, what was this? I believe, also May 12th. And this is one that has been working well with pivots on the upside. GTLB is a stock that I've traded a couple times this year, keep on getting burned with pivots breaking to the upside. But But this is one where it built out a pivot over 30, and you can see once we broke over 30, it really got out to about 35, pulled back and held $30 as it pulled back. Then we build out this little pivot at 35. Outside of a quick shakeout on Thursday, that's working well. And now we're building out another pivot right around $37. So if the market's weak coming into next week, I do see this kind of pulling back to 35 and allowing that 21 EMA, that pink line, to catch up. That would be ideal. I would rather see kind of more consolidation. But after the shakeout on Thursday and then just higher highs, higher lows, but really tight price action on Friday, looking for a break over $37 on market strength come Monday for PRVA. Next, we have SGEN. This is also a biotech stock. Biotech's fifth strongest group in the market out of 197. I really want to go to a weekly chart on this because it shows just how strong the setup is. You have that first bottom down to about 130 area, and then another shakeout to 117 and a final shakeout to 105, really shaking out the weaker hands. We quickly climb up the right side of the base, and then we've consolidated for about 6 weeks now. And then going to a daily chart, you can see we keep on testing this 180 pivot, not working too well, and then dumps under the 21 EMA just for a day, and then kind of recaptures that, consolidates, and really strong day on Friday, back right to $180. So looking for a break either over Friday's high of 180.32 or the high from July 26th, which is 181.75 as a potential entry point, and really trying to get this breakout from the base here, kind of this double bottom base in SGEN. The next stock that we'll cover is TH. This is in leisure lodging, 150th strongest group out of 197. That is the only weak part about this setup. It's got a A+ accumulation distribution rating, a 93 overall composite, along with a 99 individual relative strength rating. And looking below here, you can see exactly why it has that A+ accumulation distribution rating, because this has had relentless volume, well over the 50-day moving average here, as it rallied from 484 all the way up to about 1415, 103% move in less than 8 weeks. Now we just need to wait for it to consolidate. It has consolidated about 5 or 6 days under this $14.15 area, $14.15. If the market's weak, or if the market consolidates next week and we pull back either to 13 and the 10-day EMA or the 8-day EMA, or if we consolidate even more down to like the 1250 area, allow that 21 EMA to catch up, I think that would be even more constructive just because it has run already up 103% in a short amount of time. I'd like to see a little bit more consolidation, but if the market's strong, this is likely to continue its uptrend, breaking out over 1415, and that's an area that I'd be watching on the upside. But on the downside, looking at this 1250 area and then wherever the 21 EMA catches up to. Next, we have Beyond Air, XAIR. This is in medical systems equipment, 18th strongest group out of 197. It has a group strength rating, A accumulation distribution, 69 overall composite with a 97 individual relative strength rating. This is another stock that had plenty of power from $4.90 all the way up to $11, breaking over the 8, the 21, and the 50-day moving average, along with that 200-day as well. It traded above all the moving averages, really, really hot, and then started pulling back, flagging out on below average volume as it comes to the 8-day EMA, kind of chops through that. And then last week on, I believe this was Tuesday, it came under the 21 EMA, but rallied throughout the day to close back above that area, still below the 8-day EMA. Tested it again on Thursday, but another just quick bounce off the 21, strong closing range, and then put in an inside candle on Friday with a high of 948. So with this, looking for a break over 950 as a potential entry point, keeping our stop loss under $9 for about a 5% risk on XAIR. And the last stock that we'll cover today is XENE. This is also a biotech stock, so A+ group strength rating, B+ accumulation distribution, 82 overall composite with a 97 individual relative strength rating. Quickly going to a weekly chart, you can see that this kind of breaks out, consolidates, breaks out, really consolidated, and this has been consolidating since October of 2021. Really kind of tight price action from 25 to 35 for that amount of time, and for the correction that we went through, really, really strong action. I kind of expected this to move up quicker along with the other biotech stocks as those were ripping off the lows, but I guess it did move from 25 to 35, but nothing too extravagant. Since last week, we kind of pulled back from 35 and put in 3 really tight candles, looking for a break over any of the last 3 highs, around $34 as a potential entry point for XENE. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a favor and leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the setups, there's a link in the description below for you guys to try it out yourselves. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on TikTok, StockTwits, Instagram, and Facebook. Have a great week, and I'll see you guys in the next video.